Yeah, today we've something that's kind of relevant in the time that we're recording this
Yeah.
is called Basel III, and not something that you would see in the mainstream media, not something you would have been even taught about, in school or anything like that. But it's something that uh, has a big impact. It's going to have a big impact, and it's a big opportunity as well. I think with all of these things, you can look at it in different
Mm,
ways, and we look at it as, well, how do we benefit from this information rather than
mm,
just having the information itself? What do we
mhm,
do with it,
mm,
and what does it mean to kind of me and you?
mm,
Probably worth saying, look, just before we get started,
mm,
that we're not financial advisors. We don't want to be financial advisors. We don't give advice. We just want to give education, information, and
mm,
to empower people to make their own decisions, because
mm.
then they can see what's going on and they can see what's best for them, and they don't need us to tell them what to do. We definitely don't want to do that. So,
Yeah.
um,
And there'll
yeah,
be a link down in the description. So if people want to get in touch and find out more about
exactly.
how you can help them, check
Yeah.
out the Goldbuster link down below, everyone, and
Mm.
get in the flow of the information that Adam
Mm.
and James can supply.
And everything that we go through right now, please do your own research on this. As we always say, don't believe us. Go and do your own research, empower yourself,
Yes.
and learn this for yourself. But we're just bringing you information that the banks know all about. They're fully aware of it, and that's why they're doing what they're doing, which you'll find out in a more. But we're just bringing that information to you, as we always do, to the normal people on the street, to hardworking families, uh, like you and I. We're just bringing that information to them to help them, so they can do the same. They can emulate the banks. Is that the best way to explain it? I think. But,
Yeah.
yeah.
Be
Well,
your own bank.
Be one
yeah,
bank. Yeah.
that's
Yeah.
it. That's it. Let me share my screen and we can show you what we're talking about. Can you see that there?
Yes.
Perfect. So we're calling this the Gold Revaluation 2023, and look, ignore it at your own risk. It's a big thing.
Mm.
So first of all,
Mm.
well, what is it? This Basel III that we're talking about, and this gold revaluation. What does it even mean? And I think it's worth saying at the beginning as well. Please don't get too kind of bogged down in some of the terminology. We'll try and put it in normal kind of everyday terms, because when you read this stuff, you end up, um, looking up words and thinking, well, what does that even mean, and what does it mean to me? So we're going to put it in as kind of normal English as we can, but just bear with it if there's a few words that you're not familiar with. So. Basel III is like a banking regulation, and it's from a family of banking regulations: Basel I, Basel II, Basel III, and just like Rocky movies and Die Hard 1, 2, and 3.
Yeah.
And
Yeah.
it was all kind of started and put together in the aftermath of the 2008 financial crisis.
Okay.
As with regulation and things like that, it's always reactive. So the bad stuff happens first, and then years later, you know, what's the word? Kind of governments and countries say, right, we need to do something about that happened a few years ago, which is,
Yeah.
Some could say too late for that situation, but they're trying to do something. And Basel III is simply put a preventative measure, and it's put in place to protect, or meant to help protect, hardworking people's money when they're depositing it in a bank. Because what happened in 2008, if anyone doesn't know, is banks just went and risked far too much of mine and your money, and they just weren't responsible for the outcomes of those risks that they took. And years later, the regulators say, well, actually, you need to take some responsibility, and we're going to put this framework in place for you to work with, because banks don't do it themselves. They don't take responsibility for all these risks themselves, so they have to be forced to do it. So that's kind of what what Basel III is. It's just a changing of the times of banking and making banks kind of do what they don't want to do in some regard. They want to take all that money and just risk it and be reckless with it. But this regulation says, actually, you can't do that. So started in 2010. And yeah, it's taken a lot of years to get to this point. Still not fully implemented, as you'll see.
So will it come in 2023 then, Adam? Is that what you're saying?
So Basel I and Basel II are part of this kind of family of framework, and they're already implemented. Basel III was meant to come in before COVID hit, and then it was just delayed. And now it's kind of part in, but part not, as we'll explain. So there's still time for people to take advantage of what we think is a big opportunity. And yeah, we'll go through that as we go through the next slide. So that's what it is. It's just the regulators saying, look, to the banks, you can't do what you used to do, and you got to yeah, kind of get in line a little bit.
I think in our terms, it's reining the banks in. That's what it's supposed to do. So I'm supposed to rein the banks in, and it was supposed to come in this month actually, but the can's been kicked down the road again. So it's
And the next one then,
second quarter of next year now. So
second quarter of next year. So what, April of next year?
Yeah, well, that's the latest, but
yeah.
It's been moved before. I'm sure it can be moved again. But
okay,
the whole point we're making is there's time between now and then.
Yeah,
we see that presents an opportunity for people if they want to. So what does it mean? Well, first of all, it forces banks to be responsible, forces them to not take crazy risks and not hold on to stuff at the other end. And it means that they have to have enough cash reserves to cover their risk. Whereas before it was, a bit of a wild west of finance and, anything goes. Whereas now they have to be more responsible for the risk they're taking. The other thing that it does is it forces them to have enough liquidity. And don't worry, liquidity is not a word that most people use in day-to-day life, but liquidity just means that they need enough cash or the cash equivalent, as you'll see, to cover one, depositors' funds in the bank, and two, when they're taking these risks, they need to be able to cover those positions if anything goes wrong. And this is what they weren't doing before. So this has all been brought in because there was a gap, there was an absence of this happening. Does that make sense? The other thing that makes it interesting for us is that as part of Basel III, allocated gold is being revalued. And gold previous to this, when the banks held it, was a tier 3 asset. Don't worry about the terminology too much again, but a tier 3 asset was like the riskiest asset that a bank could hold. And it could only be valued at 50% of its value. So that's what it was before. After Basel III, gold is being revalued. Allocated gold is being revalued to a tier 1 asset. And that means that 100% of its value can be counted as 100% of its value on the bank's balance sheet. So when we talk about Basel III forcing banks to have enough liquidity, and the reason we use liquidity and not cash is you could call a tier 1 asset liquidity. So it could be cash. And after Basel III, it could also be allocated physical gold as well. So it's putting the stamp on gold and saying it's almost like a new version of a gold standard. It's not in the way that it's been used before, but gold is like a stabilizer. And when things become unstable, they bring gold in. In this sense, it's a slightly different way of bringing it in, but they bring gold in to stabilize everything. So throughout this period, when you talk about is it already here, and when's it coming in, Well, Basel III has already been implemented in the US and in the EU. And you say, well, why has that not really played a part in gold, the price of gold or anything like that? And that's because only 30% of the bullion market, the gold bullion market, runs through the US and through Europe, through the EU. The other
so it's not coming through the UK then, because we're out of the EU right now.
Well, 70% of the bullion market runs through London, and the implementation of Basel III in the UK was meant to be the 1st of January this year, and that's what's been kicked down the road to the second quarter of next year. So it's kind of part in, but the majority is still yet to come. Again, you have to do a bit of digging to find this stuff. It's not something that you that you see, but please do your research, and you'll see that how this is kind of playing out. Let's just remember that all of this started in 2010. We're now at 2022. Banks have known this is going to come into play since that point. And before that, banks were net sellers of gold, of physical gold. After that, banks have been net buyers. Why? Because they know whatever they buy after Basel III is going to have 100% of its value. It's going to be revalued to 100% of its value on their balance sheets. So while the prices are low, they've just been hoovering it up because they know what's coming.
Right now, they're getting it about 50%. You say?
They're not buying it at 50%, but it's worth 50% on their balance sheet. So while prices are low, they're buying it. Yes, it's worth 50%, but as soon as Basel III comes in, it's now can be valued at 100% on their balance sheet.
What value are they getting it now at then, Adam?
So it's still at they're still getting it at the market price, but it's when they look at it as far as their balance sheet, they can only be used as 50%. So they say, look, you have to have X amount of liquidity for this amount of risk.
Yeah.
Well, you can value the cash at face value. You can value loans at a different value. Gold, you can only use it as 50% of its value.
Okay, so I'm curious right now. So say whatever the price of gold is right now, when Basel III comes in, are we going to see a jump in that? Just what people have bought physical gold? Is there going to be a jump then, or is it going to be kind of the same, but on banks' balance sheets it will go from 50% and it'll go to 100%? That's what I'm curious.
Yeah. Okay. Yeah. So our thoughts on that is there's a few different types of ways of buying gold, and that banks deal with gold. So one is physical allocated gold, and that word allocated is very important. That means that it's exactly which bars that you own. So it's the bar serial number. The other way of doing it is unallocated, and that's where you might say, yeah, you own 10 grams, but you don't know which 10 grams. It's kind of as long as when you want that 10 grams, it can be produced. It doesn't essentially have to be there. Does that make sense?
Yeah, I guess what I'm asking is, are we going to, so whatever the price of gold is today, when Basel III comes in, are we going to see a significant change? Are we going to see a jump of, 50%, 20%, or is it kind of just as it is right now? What's your thoughts on that, really? Yeah,
I think there's going to be an increase, and here's why. Because
definitely
banks have got to, when people buy gold from a bank, and when banks are dealing with gold, it's unallocated or paper gold, which is just like a promise of gold. They're going to be pushing people, and there's already there's articles written that banks are already encouraging people that are owning unallocated gold to move towards allocated gold. So there's going to be a bigger push on allocated gold. So there's going to be a bigger demand for it. So I think, we think the price of gold's going to go up. Now, by how much? It's easy to throw out numbers and say, oh yeah, it's going to go to the moon, or it's going to 50%, whatever. But we don't know. But the fact that there's more focus being brought in on gold as this stabilizer, or almost like a new kind of gold standard in a way, then it puts way more emphasis on having physical gold because it's worth more to the banks. They can use more of it. Does that make sense?
Yeah. So basically, bottom line is, if people listening have got physical gold or they've got it in a vault, then by and large they should see an increase when we get fully into Basel III.
Yeah, we think so. We think so.
Okay.
And that's why the price has been kept down, Tom. Yeah, you know, I mean, this is just what we believe, and people have to go and do their own research again. But it makes total sense, doesn't it? When Basel III came about, the banks were fully aware of it, and all of a sudden, when they knew that this was being set up and this was being implemented, or they knew when this would be implemented, in 2010-ish, they started being. I mean, I think from the numbers I've looked at, it's over and above 30,000 tons of gold they've bought since then. They've been net buyers massively. They went from mainly sellers to buyers overnight. And it was at the same time as Basel III was put out there to be implemented. So it's strange, that, isn't it? How the metals prices have been suppressed, which we believe they have been. And then banks have been buying so much, because what would you rather buy something at a high price or a low price?
Yeah,
it makes sense that they're hoovering it up as they are doing up until Basel III fully kicks in. Then, and all we believe, just bringing it to the normal person on the street, all we believe is we all should be doing the same thing. We should be doing what they're doing, not as they're saying. Doing as they're doing, just watch what they do and do the same, because they know what's going on. They know what's going to happen. And it's basically Basel III is forcing the banks to hold enough liquid assets to cover their illiquid and riskier products, such as property, mortgages, bonds, shares in other companies, things like that. They have to have enough to cover that. And gold is basically going to be classed as a tier 1 asset now, and they can use that as liquid. And they'd rather use that, if you think about it, than cash, because cash gets hit by inflation. Metals don't.
So right now it's a tier 3 asset, but it's going to become a tier 1.
Yeah. Yes. And for all of that unallocated, all of that unallocated gold that's still tier 3, remember, tier 3 assets need to have more liquidity to hold them there. So why are banks going to want to hold on to unallocated? Because they need to cover their positions, and it's only worth 50%. So they're going to want to go to allocated gold, which is 100% of its value can be counted. The other thing to bear in mind, and this might sound a bit of a mad idea, but for, let's say, paper money, you deposit paper money into a bank, and the bank can lend out multiples of that paper money. So they don't have to have, it's not $1 in, £1 in, £1 or dollar out. It's 1 in, 9 or 10 out.
Yeah.
Well, with unallocated gold, they can do the same. So there's some stats out there that say for every 1 gram of unallocated gold, there's about 350 to 400 owners of that one bit of gold.
Really?
Yeah. So this is the finer detail of what it actually means is you're going from unallocated, where there's multiple owners, because it doesn't have to be there. Basel III is going to force banks and bullion dealers to actually have the metal in the first place, rather than just selling a promise of the metal or some kind of paper ownership.
So that 1 in, 9 out is going to end when Basel III comes in.
Not necessarily with cash, but it's going to put more pressure on banks to actually have the metal, the allocated metal, when they're dealing in it.
Because basically unallocated is going to be tier 3, isn't it? So it's going to be seen as being a risky asset.
Yeah, but when you allocate the allocated gold, tier 1 is going to be 1 in, 1 out.
Well, they can, because they can only sell the metal.
Yeah. Well,
If they're saying you own this bar with this serial bar number and it's held in this vault, then you can only have one owner of that, of allocated metal. Yeah, that's why unallocated, you'll find there's things like free storage and things like that to kind of entice you in. Well, it's free storage because it doesn't have to be there. We can all give free storage on an item that doesn't exist, right?
Yes. Well, I guess what I'm driving at is when it becomes allocated and it's tier one, it's one-to-one, I'm assuming that's going to end or be the beginning of the end of fractional reserve lending, etc. Is that right?
I think that's a bigger, that's a kind of bigger discussion, and it's not. I don't think this will end. It could be the start of it, but I don't think it's going to end fractional reserve lending as far as paper money. But it's going that way as far as metals, and maybe that's the starting point.
Maybe it's the beginning. Yeah, we don't know.
Yeah, but we don't know. Like all of these things. There's been so many reports out there that Basel III was coming in on the 1st of January, and then all of a sudden it didn't. So you're always playing catch up a little bit, but knowing that it's coming in 2023, second quarter, for us, we see this as an opportunity. And there's kind of three points to that. Is one, as James said, emulate the banks. They've been hoovering up gold since 2010 because they know what's coming. They've gone from net sellers to net buyers. Take advantage of low prices. When prices go down, the professionals are just buying more. That's all they're doing. Normal everyday people on the street, when they see something go down, we get a lot of people panicking, saying, well, it's gone down. That's fine. There's a sale on, buy more. That's what the banks are doing, and see it as a long-term thing. And the other thing is, look, act now. 2023 will be here before you know it. I know it's the very beginning of 2022, but When did they change that, Adam? So you were expecting it on the 1st of January. Was it kind of you get to the second or third and it's like, oh, it hasn't happened, and then they came out with it, or did they tell you like a week or two before that it's going to be the second quarter of 2023? Good question. I don't know the exact date that they announced the move, but it was meant to be. Initially, it was meant to be before COVID, and then they were like, right, we're pushing it back. And I think it's just been a rolling thing that's been pushed back. Obviously, for all banks to change on such a fundamental level it's a big ship to turn around. It's not just flicking a button.
But it wasn't like in the last 10 days that they suddenly changed the goalpost.
No, I don't think so. I think it was before that. It was before the date that it was due, saying, look, this isn't going to happen now. Let's push it back. I mean, it's been 10 years, 12 years. So another year.
I think it's in their interest to push it back, isn't it? It's in their interest. They can buy more metals before it does come in, which means it's in our interest to do our bit too for our own families. 100%. But even if it didn't come in for another year, even if it's pushed further down the line, you're still better off. We always bring it down to basics. You're still better off having your hard-earned savings in metals than in cash. It really is as simple as that.
Can you put that slide back up again, Adam?
Yeah.
Where it says gold revaluation, because there's some. I haven't really done any numbers. I'll do some numbers quickly on it. So. So gold is 38. Revaluation is 138. 138 comes to Donald Trump, interestingly enough. But if you do gold revaluation, it comes to 176. 176 is actually Back to the Future. There's a lot of codes and numbers in there. And one I discovered recently is, in the Matrix where they upgrade, they say, give us some upgrades. So if you do Matrix upgrades, that comes to 176 as well. And I just was thinking that just the last couple of days, but that comes to gold revaluation. And then you're talking about 2023, and this is interesting because I was thinking just over the last few days, I'm thinking that perhaps a revaluation of everything could happen in 2023. But if you drop the zeros, one of the ways to do it in Gematria, I like to keep it open, but you can drop a zero in Gematria when you do the numbers. So that would take you to 223. And 223 actually comes to global currency reset, which is interesting. So it's interesting the wording you put up there, gold revaluation. It's fascinating actually. And even if you do, gold revaluation 176 plus 223 global currency reset, that comes to 339. If you break that, you can get 245, which is currency revaluation. It's interesting. My name, Thomas Sidney Bushnell. But then it leaves you with 154, and 154 is the Golden Jubilee as well. So anyway, there's some nice numbers there that I just saw with that. But it's interesting. Yeah. I've been thinking about those things, and then you kind of put it in your slides. So yeah.
Think Back to the Future is quite interesting because it's like a new version of the gold standard, although it's not going to be exactly the same, but it's fundamentally bringing gold back in as a stabilizer.
It always has been. It always, like in history, we've talked about this before in previous videos, where gold's been brought in, it's been kicked out. Gold's brought in, this has been kicked out. It's always been brought in to stabilize the system. So, but if you're ahead of that, if you know when that is coming in, if you're aware of that, you can use it to your family's advantage. The banks use it to their advantage. We need to use it to our advantage, and that's all. That's really all we're here for, is to bring that information to the normal, average day people on the street, so they can benefit.
Yeah. How do you think it will affect? So when Basel III comes in, will we see a direct reflection on how that could perhaps affect silver? You know, the sister of gold.
They're connected, aren't they? So I think so.
Yeah, I think so.
They're very much brother and sister, aren't they? That's the way we look at it, anyway. But
there's been a strong relationship between gold and silver for years, and I think when we in our last video, Tom, when James wasn't here, we talked about
doing the ratios, weren't we?
The ratios. So there's definitely going to be a knock-on effect, and people are looking at the gold-silver ratio to look at which metals to buy. So if gold's going through the roof, then what usually happens is one moves, then the other catches up, and it's in those price differences that you can take advantage of that. So we think it's gonna be a shift throughout gold and silver.
So silver's like gold's excited friend. Gold's the level-headed one, and the friend, the silver's like the excited one. It always seems to just go whoa and just.
Is there any other legislation that you got Basel III, and that seems to be kind of tied to gold? But is there another piece of legislation that is specifically for silver, or is it just kind of one and t'other? You know, they're connected at the hip, and one will affect the other. Or is there another piece of legislation that we're waiting on as well in regards to silver? I don't know if there is or not. I've heard of Basel III, but I've never heard of anything else.
Not that we've seen. It's usually. Throughout history, you can see that a lot of this stuff's just been centered around gold, and using gold. And I guess that's like a cultural and psychological thing, that if it's gold that's worked before, then people bring gold back in rather than just using something different like silver. So, the main focus is usually on gold, but anyone that knows precious metals knows that gold and silver have a very tight link.
Yes.
Yeah, I truly think silver's in a lot. Yeah, I personally think that silver's been suppressed more than what gold has. But that's just my personal view.
Yes. Yeah. So I'd probably agree with that.
I definitely think silver's a better buy right now as we speak. Looking at the ratios, it's definitely a better option. That, again, in our view, we don't tell people to do this or advise, but in our view, silver's definitely a better buy right now compared to gold.
Yes.
I think any time that the spotlight's been, is shining on precious metals, whether it's gold or silver, it has a knock-on effect to the others. So, it's a good opportunity for sure.
Yeah. Well, brilliant. Thanks, boys. That's been enlightening. I knew about Basel III, but I didn't know as much as you shared. So, thank you. Any concluding thoughts?
We try to keep it simple.
Keep it simple.
It's difficult. It's difficult at times to try and keep it simple. That's why we have to. Our brains are working that much harder to just try and keep it simple. And
I think it's
keep it simple. Yeah.
It's difficult as well because if we talked in the same sense that the information we're reading, it's talking about bank regulatory framework and all these terms that you just don't use in day-to-day life and that don't mean anything to people. So we're trying to take it from legislative terms and saying, okay, fine, great big words, but what does it mean for me and you? Like, what does it actually mean? What do we do with it?
Show people the bacon. That's what they want to know.
Yeah. Trying to put it into layman's terms, aren't we? And just some people take action, because if they don't understand it, they won't take action. They won't do anything.
Yeah,
we'll just switch off to it. 'Cause it's really boring too, Adam, isn't it? When you read it all, it's really
yeah. When you're
trying to
when you're trolling through it and you think that's great, but what's the point? Like, what point are you trying to make? So
I just want to know, is this a good thing for silver and gold, and in the relative short term, the next year or so for them? So
yes, exactly.
Well, whether you're in silver or gold, we believe you want a winner. Whether you're in whichever metal you're in, you want a winner.
Yeah,
When it all kicks off.
Brilliant.
But yeah,
great. Thanks so much, Tom. Thanks for having us on.
Yeah, it's a pleasure. We'll see you again soon, and we'll speak soon. And everyone, again, check out the link below. You'll see the Goldbuster link there. You can sign up for information more about what Adam and James do and how they can help you. That's the important part. So,
great.
All right, boys.
Thanks, Tom.
Thanks, and cheers.
Take care.
Cheers.
Take care.
Bye.